General Manager of Marketing and Communication Department of the bank. On behalf of the State Bank of India, I warmly welcome all members of the media to this important gathering. We are here today to share with you the financial results of the State Bank of India for the Q2 of the financial year 26. It's my privilege to warmly welcome on the dais our esteemed chairman, Shri Challa Srinivasalu Setty sir, and our respected managing directors, Shri Ashwini Kumar Tiwari sir, Shri M&amp Tonse sir, Shri Rana Ashutosh Kumar Singh sir, and Shri Rama Mohan Rao Amra sir, along with our Deputy Managing Director Finance, Srimati Saloni Narayan. I also extend a warm welcome to the other Deputy Managing Directors and senior officials of SBI who are present with us this afternoon. I wish to welcome this august gathering with a few rhyming lines. So चांद भी आएंगे तो क्या बात बनेगी, सो चांद भी आएंगे तो क्या बात बनेगी, आप सब आए हैं तो इस महफिल की औकात बनेगी. With these words and without further delay, I now invite our esteemed chairman, Shri Challa Srinivasalu Setty sir, to address the media and present a comprehensive overview of SBI's financial performance for Q2 financial year 26. Over to you, Chairman sir.
Thank you. Good afternoon, ladies and gentlemen. Thank you for taking time to join this press meet today, post announcement of Q2 FY26 results of the bank. At the outset, I would like to thank all of our customers, employees, shareholders, and regulators for their continued trust and support. We remain committed to supporting India's growth story while maintaining sustainable value for the bank. The results for Q2 FY26 demonstrate our healthy growth across business segments, robustness of financial numbers and asset quality, reflecting the strength of our franchise and the trust of our customers. I will first start with a brief description of the present global and domestic economic scenario and will then discuss bank's performance. The global economic outlook for 2025 presents a picture of modest but uneven recovery. The IMF's World Economic Outlook October 2025 projects world GDP growth at 3.2% and 3.1% in 2026, reflecting steady but subdued momentum amid persistent structural challenges. Regarding inflation, though it has broadly moderated across most economies, the pace of disinflation remains slow. Against this global backdrop, India's macroeconomic outlook remains one of cautious optimism, underpinned by robust domestic demand and easing inflationary pressures. The RBI projects real GDP growth at around 6.8% for FY26 and 6.6% for FY27. Growth is being supported by strong investment activity, recovery in rural consumption, and buoyancy in services and manufacturing. The GST 2.0 reforms are expected to boost private consumption and domestic demand. On banking front, scheduled commercial banks' credit growth is slowly picking up and grew by 11.5% year-on-year. Last year it was again at the same level for the fortnight ended 17th October 2025. While deposit growth remains sluggish at 9.5%, which was 11.7% last year. Going forward, we expect demand for credit to continue in the second half of the financial year. By looking at the trend, deposits and credit growth of scheduled commercial banks may remain in the range of 11 to 12% during FY26. However, risks persist from volatile global commodity markets and potential spillovers from trade disruptions. Overall, India's near-term outlook is strong, with macroeconomic stability providing space for sustained medium-term growth. Coming to SBI, the results for Q2 FY26 reflect the bank's consistent financial performance for the quarter, driven by healthy growth in SME, agriculture, and retail advances, improvement in asset quality, and strong operating profit. These advantages stem from our institutionalized framework, maintaining prudent risk management practices, digital initiatives which continue to gain traction. I'm happy to share that our total business has crossed 100 trillion rupees for the first time, and this shows the customers' trust in us. In fact, I would like to say that 100 trillion does not sound great. It should be 100 lakh crore rupees. Then only it sounds heavy, right? And the deposit growth, in terms of the performance, the total deposits have grown by 9.27% year on year and crossed 55 trillion, is currently for 55.92 trillion. Term deposits have grown by 9.91%. Our current account deposits have witnessed a robust growth by 17.9% year on year, and CASA deposits have grown by 8.06% year on year, with CASA ratio at 39.63%, an improvement of 27 basis points over the previous quarter. Bank's current account deposits growth has continued to remain strong during the year, despite competitive market environment. We have taken several steps to strengthen our liability franchise. Our foreign offices deposits have grown well at 11.76% on year-on-year basis. Domestic advances have grown by 12.32% year-on-year. Our RAM portfolio, again is a milestone, has crossed 25 lakh crore mark, and the credit growth continues to be robust across all segments. SME, agriculture and retail personal have grown by 18.78%, 14.23% and 14.09% year-on-year respectively, all registering growth in double digits. The corporate sector has grown by 7.1%. Our foreign offices advances have also grown well by 15.04% year-on-year in rupee terms. The domestic credit deposit ratio was at 69.82% at the end of Q2 FY26, indicating sufficient headroom to address future growth requirements of the bank as well as for the economy. I'm glad to announce that we have posted quarterly net profit of 20,160 crores, which has increased by 9.97% year on year. Operating profit for the quarter is at 31,904 crores, which increased by 8.91% year on year. ROA for Q2 is at 1.17%, which has improved by 3 basis points on quarter-to-quarter basis. Our asset quality continues to be industry leading. Our gross NPA ratio has improved by 40 basis points year on year and stands at 1.73% as at September 25 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, the robustness of our underwriting processes and collection efficiency. Our net NPA ratio is also improved by 11 basis points and stands at 0.42%. The slippage ratio for Q2 was 0.45%, while the credit cost for Q2 stood at 0.39%. The NPA book has been well provided with PCR at 75.79%. The bank remains well capitalized and we have sufficient headroom to take care of normal business growth requirements. Our capital adequacy ratio has improved by 86 basis points year on year and stands at 14.62% against 13.76% a year ago. Common equity tier 1 ratio has also improved by 152 basis points to 11.47%, and both the ratios are well above regulatory requirements. As you are aware, bank has raised 25,000 crores capital during the quarter by way of QIP. We are making continuous progress in digital banking, which is an important customer acquisition engine for the bank across asset as well as liability products. More than 9.35 crore customers are registered on YONO, driving digital agenda of the bank. 64% of regular saving bank accounts were opened through YONO in Q2. The share of alternate channels in total transaction increased from 98.2% in first half of the previous year to 98.6% in the current half year. The bank's in-house analytics team has also won an award for Best AI Solution in the CII National AI Awards 2025. Our subsidiaries continue to demonstrate consistent performance and continue to strengthen value for all our stakeholders with their expansion of digital channels, innovative products, and enhanced customer experience. Many of our subsidiaries are leaders in their respective segments, and we are committed to nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that bank continues to report ROA greater than 1%, and our ROE was at 20.21% at the end of Q2 FY26. The bank's return on equity profile is currently higher than its credit growth, implying CET1 accrual in the future. SBI continues to be the market leader in deposits and advances, with total business crossing 100 trillion rupees as end of quarter September 25. Our asset quality reflects the risk-adjusted profitable lending. By leveraging technology and analytics, we continue to be connected to people and a future-ready organization. To conclude, I want to thank you all once again for your support of the bank. We consider it as a privilege to be able to contribute to the progress and growth of the economy. The bank remains committed to rewarding your trust in us with the superior sustainable returns and value creation over the long-term horizon. I wish everyone here the best of health and happiness. My team and I are now open to taking your questions. Thank you.
Thank you, Chairman, sir. We will now move on to the media question and answer. To ensure a smooth and orderly session, individuals will be called by name to ask their questions. We kindly request everyone to please follow the format and limit themselves to maximum 2 questions, focused on the results. If time permits, you may raise your hand to give your interest, indicate your interest, and we will accommodate additional questions. Thank you for your cooperation. And now we will begin with Mr. Piyush Shukla from Hindu Business Line.
Good afternoon, Chairman, MDs. Sir, just one clarity. You have gotten one-time gain of 4593 CR from your sale in Yes Bank, 13%. The overall estimate was that you will get 8819 CR. So the remaining portion of it, will it be realized in the next quarter? First, and will you further offload your stake in Yes Bank? Second is on your, do you feel that deposit rates have now bottomed down because your the fresh incremental weighted average term deposit rate, it has gone up by around 5-7 bips. Just want to understand that. Also some guidance on NIM, it has improved this quarter. These are the queries. Thank you.
Thank you. On the S Bank, the total consideration is the amount which you mentioned. The gain only gets reflected here. The gain is 4,593 crores and post-tax gain is 3,868 crores, which is reflected in the net profit. As far as your deposits growth is concerned and also interest rates, I think currently we have not looked at any readjustment in interest rates. Probably we look based on what policy rate movement will be there. But otherwise, I don't think we'll be looking at the fixed deposit rate. But what we are calibrating is the rates of interest on the wholesale deposits. Obviously, that is also reflected in our cost of deposits and cost of resources going down. On the NIM, I think our guidance has been that our exit NIM will be similar to what we have had in the previous year. So above 3 is our guidance. I think we are sticking to that. Thank you.
Thank you, Piyush. And now I request Shubhana Shah from Mint to please ask the question.
Thank you. Sir, I wanted to ask, given that we've seen government and policy reforms in GST rate cuts, have you made any changes to your credit growth outlook for the rest of the year? And in that backdrop, have you also estimated what would be your credit growth for the next financial year? Because a lot of policy reforms by the RBI would come into effect from that. And I'll ask my next question.
Oh, I did mention, when the banking reforms, what I called banking reforms as part of the MPC announcements, they are definitely credit accretive. And my take on at that time is that at an industry level, we must see 1% additional credit growth. And we are also revising our guidance from 11%. I think we are putting the credit growth estimate at 12 to 14% now. And the Q2 numbers indicate that there is a robust growth across the business segments. As you have seen, I think 12.3%, while we were saying 11 to 12%, we have exceeded the 12%. Based on many enablers which RBI has given, and also the fiscal measures in terms of the GST 2.0, we believe that there will be sustained consumption demand, which gives an opportunity for us, particularly in the RAM segment. There could be continuous robust growth, what we have witnessed, double-digit growth. So we are revising our credit guidance to 12 to 14%.
This is for FY26?
FY26.
And how about FY27?
26-27 we'll see in March 26
Okay.
when we come back.
Okay. Sir, another question would be on corporate credit growth. That has still been in single digits while it has seen a sequential growth. Some guidance, if you could give on that, how do you see the second half of the year panning out? What is the pipeline looking like? What sectors you're seeing demands from?
Now, as you rightly observed, I think we are able to reverse the negative growth in the corporate side. In fact, this quarter corporate credit growth at 7.10 is barring March 25, where we had good growth. After several quarters, we have seen growth coming back in the corporate side. I think we still are required to ramp up this credit growth. There have been a lot of prepayments, either because we were not willing to match the pricing, or many of the corporates had cash, so they prepaid the loans. We assume that in the rest of the 2 quarters, we should have double-digit growth. That is, our pipeline is very strong. You would like to say anything?
So almost 7 lakh plus crores of pipeline, including sanctions done and those in discussions. The utilization of working capital is 61.8%, so a lot of room there as well, or rather 60%. And term loans also, disbursements are still left. So a lot of optimism. The thing is that one, as Sir said, there are a lot of repayments. A couple of them from government agencies who had cash given to them at the end of after the budget. Secondly, the corporates also have gone in for a lot of equity raise, IPOs and FPOs and so on and so forth. So many of them have been used to pay down loans. So combination of all this is the fact that the growth is in single digits. But as Sir has said, basis our pipeline, basis our discussion on their plans, we hope to see a double-digit growth.
Thank you, sir.
Thank you. Next question is from Joel from Economic Times.
Good afternoon, sir. In terms of provisions, sir, have you all made any floating provisions this quarter? Because a lot of banks have made, considering ECL coming up. And if you'll give us an estimate if you all have for ECL, sir. I have a couple of other clarifications.
No, we have some room in terms of additional provisioning which is available to us. Though it is not specifically towards ECL, we believe that one, as I mentioned earlier, again I'm reiterating the impact of ECL, both in terms of our preparedness, in terms of the glide path which is given, is likely to be very limited on our balance sheet. So we have adequate time to think about it, and we are also working with RBI for finalizing the guidelines. We are giving our feedback on them, on the draft guidelines. And once final guidelines come, we will have a fair estimate about the requirement, but I don't think there will be any major impact in terms of...
Have you made anything this quarter?
We have not made anything specific.
Nothing specific. Okay. On margins, sir, you mentioned 3% plus. Do you think that we are at the lowest point in terms of margins? Because year on year, we are still falling. In the last 2 quarters, margins have fallen year on year. What's your prognosis on margins? Will we improve from here on?
We have, I believe that we have outperformed the expectation of the margins. Our guidance was that there will be a U-shaped curve, and we are sticking to that. And in fact, the U-shaped curve has been advanced. I said that from Q3 onwards, it will move up, but we were able to contain our cost of resources, and we have advanced that movement. And I think the momentum will continue.
foreign offices have seen a sharp increase this quarter. Any reason? Because a volatile world, trade being impacted, why is foreign offices loans grown so sharply?
This is mainly, if you see from a dollar terms perspective, is about 8%. 15% growth is translation, foreign exchange translation, because the rupee has depreciated. Then nothing unusual growth rate.
Thank you. Next question is from Shrishti of ETB FSI.
Thank you, sir. My question is on the acquisition financing. In one of the forums you addressed, banks should be allowed. Now, RBI has come up with the draft guidelines. What are your comments on the parameters set by the RBI? This is the first question, and then I'll go on the next.
We can ask the next question also.
Sir,
if I find easier, I'll answer that first.
Sir, on the corporate side, you spoke about from SBI perspective. Now, a lot of corporates have gone to bond markets, and this kind of movement has been seasonal also. Some banks showed improvement, some did not. Is Q2 the turning point for banks where corporates are coming back for borrowing? Can we consider this as the turning point? And there's one more.
So from a corporate credit point of view, the shift to the market is generally opportunistic. In the sense, the primary borrowings any corporate would like to have is the bank borrowings. And they access the market depending on the market conditions, particularly on the pricing side. So I believe if you see the corporate credit growth momentum, earlier also we mentioned several times, the first signs of increased utilization of working capital is a good movement. We have seen from Q1 to Q2 increased working capital utilization, which is also a reflection of the consumption demand which is coming back. Obviously, most of them meet their additional work credit requirements through the working capital limits. This sustained consumption demand is very important and critical element for them to move towards capital expenditure, whether it's brownfield or greenfield expansion. We have to watch for another quarter. So far, even the current quarter, we have seen the sustained credit demand in the retail side, which gives hope. And number two, on the pipeline, what Mr. Tiwari has mentioned, while some of this pipeline got moved into the sanctions and disbursement, we are also having adequate discussions in terms of creating the new pipeline, which is a good thing. It is not that the pipeline is getting either depleted faster or not there at all. So this gives us confidence that double-digit credit growth, both for us as well as for the system, is quite possible.
Sure. Sir, on M&A finance.
And the first question, I think we still are evaluating in terms of what suggestions we can give. We have some more time. We have not frozen our views. Obviously, the requirement of restricting to the 10% of the capital is something what we will definitely take up with the RBI through the IBA.
So you've also spoken about artificial intelligence just in the introductory remarks. How bullish is SBI on AI? And if I talk about a 5-year period, investments in AI has seen how much of gain and tech spends. I mean, how much of tech spends is being, occupied by AI now? If we can have some sense on that.
It's too early to talk about AI spend as a special spending, because much of the AI infrastructure is also a common infrastructure. You don't create infrastructure only for the AI purpose, right? But our approach towards AI is to create an enterprise level AI. While we have been pioneers in predictive AI adoption, some of the pre-approved personal loans and fraud risk management, we have extensively used our predictive AI models. We are moving to now Gen AI and agentic AI. But I think it's too early to talk about the tech spend on AI. But our approach to AI is quite robust, and I think we would be using AI not only for fraud risk management and loan model evolutions, but we will also be using extensively for hyper personalization. We are launching marketing technology this quarter, MarTech, what they call it, and building the AI tools for personalized and hyper personalization offerings.
Thank you.
Thank you, sir.
Next question is from Ashwin of Reuters.
Hi, sir. Hi, good afternoon. Last time you had mentioned that the impact of tariff on the bank would be limited. Now you have had more time to do the assessments, see how this has developed. Like, is the stand same still? And can you give some assessment, like from your side, what you have seen, what would it be going forward? What are the sectors specifically? Any numbers you can share would be greatly appreciated.
There are 3-4 sectors definitely are getting impacted, but the September quarter was not a good indicator because a lot of front loading of the orders have happened because the additional tariff was kicking in 27th August, right? So a lot of dispatches have happened in the September quarter. We will have to see how it is playing out in the December quarter. So far, we haven't had any asset quality issues because much of our customers seem to be having, long-term contracts and some engagement with huge retailers which they supply to. We have not had any asset quality issues, but we are constantly engaged with them, that either in terms of order flow or in terms of the payments, how it is going to play out. So it's maybe we need to wait for the December numbers to come. None of them have shown any distress in terms of asset quality, but obviously there are concerns in terms of how quickly these tariff-related issues are settled.
So just one more question. This is on retail advances specifically. We have seen reforms, GST cuts, which came in. So immediately after, did you see any pickup in any specific categories?
Absolutely. We have seen phenomenal pickup in auto loans. I think in auto loans, not only that we have increased the growth the last 7 to 8 days post the GST, we also had acquired the market share in case of auto loans. Similarly, I think if you have seen for the first time, we have had a good growth rate in express credit. We still want a double-digit express credit. This is also a reflection of the consumption demand because a part of this definitely goes for white goods and other things. So these two areas we have seen a good demand.
So when you say phenomenal pickup, is it what kind of uptick are you seeing? Is there any
auto loans? I think we have had a very good in a short span of 1 week. The amount of car loans which we have given, I don't have the numbers, but I think it's a good pickup on that.
Thank you so much.
Sorry? Across vehicle segments, yes.
Thank you. Next
we don't do two-wheelers, it's basically the cars, right?
Next question is of Gopika from Reuters.
So I just want to understand the strong pickup in your current accounts. What is contributed to that this quarter? And secondly, your cost to income has inched up a little bit. Is it any miscellaneous expenses? Can you elaborate on that?
The first one on the current account, we've been talking about the governmental current account balances because of their efficient cash management not going to be available to the banks. So for the last 12 to 18 months, we've been focusing on improving our offerings to non-governmental accounts, focusing mainly on business accounts. And the other thing is that we have set up a lot of transaction banking hubs across the country to acquire the current accounts as well as service them. And we have now completely overhauled our package of services which are provided to business current account. So the growth what we are witnessing in the current account is coming from non-governmental current accounts. I think this is one important element. And one other important element which is not reflected here is our daily average balance in the current account is going up. Not only current account, even the savings bank, the daily average balances are going up, which is resulting into a lower cost of resources. That is also important to remember that. And what is your second question, sorry?
Why
cost to income, I think there have been some overheads which have, but nothing unusual in that. Maybe some seasonal variations, some of the expenses getting shifted to Q2, that's it.
And this daily average going up despite you reducing your savings account rate. So is there any particular reason, or earlier you used to say the money used to go to the mutual funds?
No, savings account, one is of course the number of saving accounts which are being opened has gone up. And number two, we have started a campaign called Shubharam. While we do not insist on any minimum balance, most of the accounts get opened with zero balance also. But we also realize that if customer is educated properly, why people open current account? They want to save, right? So that campaign mode in terms of making people that you can put some amount in that, that's what we call funding the account. The funding the accounts, which used to be much lower, now almost 70 to 80% of the accounts get funded within a month to 45 days. That is also adding to the average balances.
One final question on your business. It's 100 trillion now. We are just in the second quarter. What is your target going forward? Where would you like to see it?
We believe that the deposit growth rate of double digit, around 10%, which means that you add another 5 lakh crores in a year. That means half of the period is over, and 2.5 lakh crore get added. And 12% growth rate on the advances would be around 4.8 to 5 lakhs. Half of the season is over, another 2 lakh crore, you get 2 to 2.5. So there is a potentially another 4 to 5 lakh crore business can be added during the current financial year, based on whatever guidance we have given.
Thank you. Next question is of Hamsini from Money Control.
Hi, sir. I'll stay put on the point on 100 lakh crore. Congratulations, that's a very big milestone. Your RAM book at 25 lakh crore is possibly the size of HDFC's advances. If I look at each of the segment, within top 3 to top 6 banks is the business that you do in each of the segments. At some time, does it sort of concern you that maybe size is catching up, how you work around on controls, on tightening processes, etc., because you have a fair amount of decentralization as well as centralization. I'll ask my next question after this one.
No, it's a good question. In fact, what we take pride in, not only in these numbers are, in India, the potential is huge. What we take pride in operating at scale. I think several times I did mention, a lot of people ask me why your cost to income ratio is so high. Because we take the best people, train them, and our compliance mechanism is so strong. I was just telling my team that the largest number of compliance and risk professionals are deployed by SBI. As you mentioned, it's a decentralized manner. We have compliance and risk professionals up to the regional office level. It is not a centralized compliance and risk management. Of course, we do monitor at the central level. So the risk management, technology adoption are critical to manage the scale. While you have your own product profile, you have trust element, people trust you, 75,000 people every day come and open accounts, is not an easy task to maintain. That means you are providing the services what people are expecting from you, and you are creating an element of trust constantly. And number 3 is that you are able to operate at scale. Our technology initiatives, digitalization, risk management is all aimed at managing the scale. I believe that this itself is half of the story. I haven't even probably will begin now. If we have ambition of reaching the top 10 global banks and assets, there's a long way to go. While it is a function of the economy, as the economy grows, we continuously maintained 20% of the GDP as our asset portfolio, right? So, which means that this our ambition is to become 25%, as I stated earlier, which calls for the scale to be managed, and we have not managed this scale, as we keep saying, by doubling the branch count or doubling the head count, by investing in the right technology.
Lovely. This quarter is also quite a milestone for you in terms of 2 capital related events that have happened. The largest QIB, 25,000 crore, and Yes Bank stake sale that concluded after 2 years of meticulous planning. There is another 10% stake that you continue to hold in Yes Bank. Before I get to what you would want to do with it in future, how satisfied are you? What sort of an IRR has the transaction yielded for you? How satisfied are you that Yes Bank has actually found a new promoter?
I think more than the IRR, we are quite happy that we were part of the restructuring. And incidentally, I was also on the board when restructuring happened. I feel proud that I was able to be part of this closure also. It is very important that the restructuring had to conclude somewhere, and the conclusion is not in terms of the 3-year period or 5-year period. The conclusion is that you bring a strategic partner to run that bank. And to that extent, it is extremely satisfying for us, more than the IRR. But since you have asked for IRR, I think we are good. I think 14% IRR is something what pre-tax IRR is a good IRR. But more than, as I mentioned, it's not about IRR. We have not gone there for making any profit. I think it was important for us to ensure that the system level important bank is rescued and reconstructed and thrived.
The 10% balance stake, sir.
At the moment, we are not looking at it. There is no compulsion for us either to hold it or exit. So we will take an appropriate call at the appropriate time.
Thank you.
Thank you. Next question is of Benichan from New Indian Express.
Hi, sir. This is again about the festive sales and the credit demand due to that. You said the last week of September had a phenomenal impact on growth, credit demand. How was the October? Has it moved on to October? Because some data extrapolation from RBI said that, okay, there was more than 100% credit growth between September 5 and October 17. How was it been for you?
For us, it's not impacted. We are continuing to see the robust growth in the RAM segment.
Okay. And on the M&amp financing, will it be under the corporate banking book, or you will have a separate vertical as and when it is RBI allows it?
Which one?
M&amp financing.
M&amp mostly will be corporate.
Okay. It will be under the same vertical?
Yes.
No. Okay. Thank you.
Thank you. Next question is of Kabir from Informist.
Hi, good afternoon, sir. Sir, I have a couple of questions. The first one around the current pipeline, credit pipeline of the bank, around what amount would it be? And second one is around capital. So how much excess SLR does the bank continue to hold? And are you planning on using it to fund credit growth in this quarter? And was any of it done in Q2 as well?
From excess SLR, I'll respond, and Mr. Tiwari will respond on the corporate credit growth, the pipeline. Excess, we continue to have almost 3.5 lakh crore excess SLR. And so the liquidity has never been a problem for us. And as far as the capital is concerned, the current capital ratios and also the next half year profit, I mean, if you take the full year profit, it gives us ability to fund almost 12 trillion credit growth. If you are looking at 5 trillion, I don't think there is any problem either on the capital side or on the liquidity side. So corporate pipeline.
So it's 7.06 lakh crores, split half between sanction, awaiting disbursement. Many of these are projects will take time to disburse, and the remaining are under discussion. So split half.
Thank you. And sir, lastly, you still have a 20,000 crore board approval for fundraising. Now you're saying that you have enough profit and enough funds to fund 12.5 lakh crores of credit. So can we assume that the bank is not going to come to the market in the second half as well?
Not on the equity side. I don't think we will access the market on the equity side.
No, sir, bonds.
The bond side, yes, we will definitely take a call going forward.
Okay, sir. Thank you.
Thank you. Next question is of Manojit Saha from Business Standard.
Good afternoon, sir. NII growth is still around 3%, pretty flat, probably reflecting the entire deposit repricing has not happened. So when do you see the deposits to get completely repriced of the 100 basis point rate cut?
Fixed deposit repricing happens over a period of time. It takes about 12 to 16 months, what we have mentioned. So from the last rate cut, we just finished 6 months. I think every quarter, bulk of fixed deposit get repriced, and this repricing will continue for another 2 quarters.
You have also, to negate the impact of the on M&amp, you have also repricing retail lending rates. You have tweaking the margins upward. So will that strategy continue going forward?
We haven't done much tweaking on the pricing side, except on lower CIBIL score, CIC score. Otherwise, I don't think we have done too much of tweaking on the retail loan side.
Okay. One last question. Was there any MTM loss on the bond portfolio because yields have gone up? Your other income may have still gone up because of the Yes Bank stake sale, but the profit on sale of investment, can you throw some light on bond portfolio?
Treasury gains were lower. You want to add something now?
As far as the trading portfolio is concerned, we had a MTM positive as of September, but every day it's a dynamic position. But for September position, we had the question of almost absorbing 20 basis point increase, still breaking even without actually landing in the zone of losses. So we had a fair churning. We have a clear understanding of what we are doing.
Okay, thank you.
Thank you.
Next question is of Manish from Money Control.
Hi, sir. Sir, I have two questions. First question, you are optimistic about double-digit growth in the corporate lending. So, but there are a few set of people in the market who are expecting another set of rate cut in December policy. So that will ultimately make bond market more attractive for the corporates to raise funds. That's what we have seen in the first quarter as well. So will your optimism sustainable in the H2?
So our optimism is also stems from the fact that our house view is that we may not have the rate cut till March. If it is front loaded in December, yes, we may have to review our credit growth expectation. But our credit growth expectation is also based on robust pipeline what we have and the discussions what we've been having. The rate cut, a significant rate cut definitely will require some readjustment in our assessment. But for the time being, we hold the view that double-digit corporate growth is feasible.
And so second question, you have acquired some around 12,000 crores of secured and unsecured loans in this quarter. It is mentioned in the footnotes of the results. So wanted to get the breakdown of this, like what kind of loan are this?
No, other than express credit, everything is secured. It could be some pension loans and all, but predominantly gold loans and housing loans. All these things are secured loans.
Okay, thank you, sir.
Thank you. Next question is of Ashish from PTI.
So the small breakdown in the 7 trillion corporate loan pipeline which you mentioned about. You mentioned that sustained consumption is a necessity. So how much of it would be brownfield, greenfield, the capex related one, and how much would be working capital lines where, as you said, utilization levels are going up?
Almost 50-50 yet. You can give the numbers.
So term loans, which are more representative of capex, etc., that is the bulk of the pipeline under discussion. So as I mentioned earlier, the split between the 7 lakh crores is half-half. Half is sanctioned, half is under discussion. The discussion, most of it is term loans, almost more than 3 lakh crores. Similarly, for the pending disbursements, again the bulk is term loans. So therefore, the investment side is the predominant themes. Of course, you have to take into account that NBFC, which has been a major demand, is largely term loan based, though it is used for their own disbursements. So that, with subject to that caveat, the rest is all investment credit.
Oh, and which all sectors is this coming from, sir, broadly?
So largely the sectors which are, apart from NBFC, power is one sector where there is a lot of pipeline. Renewable energy, which we now classify outside of the traditional power, is also very strong pipeline. We have hydrocarbons, some of the large refinery projects are there, iron and steel, and real estate, commercial real estate.
So of the 7, how much would be NBFC, sir?
I think we don't have that number, we'll give you separately.
Okay, sir. And secondly, sir, the newer version of the YONO, sir, in between also you spoke about it. When do we expect a launch, and what would be the capabilities of the system? Because from a transition perspective for customers, you have a big base of customers now. So what would be the capabilities which you are looking at on day one?
One is we are aiming for commercial launch during the current quarter. Unless something, some issues crop up, I think they are scheduling for the current quarter. That's number one. Number two, as I mentioned earlier, YONO 2.0 is beyond the customer journeys. While we are reimagining every customer journey, you will see a brand new app with more intuitive app, and we have completely refreshed the technology behind this YONO 2.0. I did mention earlier that it is an omni-channel experience, at least from a technology point of view. we have 9.3 crore mobile banking customers. We also have 10 crore internet banking customers. Some of them could be, they use both but for them to give a common experience, we have rewritten the code. We have completely revisited the code and built internet banking, mobile banking, and branch portal, which will have similar journeys. Code is rewritten from that angle. And we also have made robust technology platform in terms of, like, for example, we have currently 9.3 crores. Our ambition is to have at least 20 crore mobile banking customers. So the platform is built right from the beginning to handle this 20 crore customers. So which means that you need to have a robust technology, high availability, apart from being very intuitive customer journeys. Sorry? No, as we actually move the current customers, anyway, automatically will be moved to the new app and then focus on new registrations. This is also a reflection of the smartphone penetration across the geographies. Today, almost 70% penetration is there in our own customer base. That means, we have enough potential to grow these numbers.
Thank you.
In this quarter, mostly end of December. Yes.
Thank you. Next question is of Abhijit Lele from Business Standard.
Good evening, sir. My question is taking on the international side. You had almost a 15%. How sustainable that it would be? And if you could give a color on the geography-wise pattern that could be emerging, because now it's almost more than 10 months that the trade sanctions and the subsequent volatility in the markets has come in.
So first, I'll answer the last piece of your question. One is this: neither trade sanctions, tariffs had no impact on our international book, both in terms of growth or in terms of asset quality. If you see, one of the best asset quality is what we have been able to manage here. And as far as 15% credit growth, I think, as I mentioned earlier, it's also because of the rupee depreciation. 8.5% is the dollar credit growth rate. I think will continue. Geographies, you would like to add something?
Geography-wise, basically US operations, which accounts for almost 25% of the overall portfolio, GIFT City and Mevana. These are the three which contributed increasingly.
The second question is about the M&A. Since you also have a benefit of a SBI Capital Market as a subsidiary, what really are the plans for it, especially for this one, in terms of the collaborations? And
no, we will definitely utilize our merchant bank platform. What we have is one of the oldest and largest merchant banking entity in the country. Obviously, they'll be part of our journey.
Earlier, you had a plan for the joint venture for the SBI Capital Market, almost more than 10-15 years back.
Now we don't.
Now
no.
we will
not be looking at joint venture.
Okay. And third, last two is about how till now the other income and all have been contributing to the net profit more because of the circumstances. Going forward with the improvement in the NIM, can we expect that it is the main bread and butter which will begin to really provide for the profitability?
Obviously, I think our focus is to be, maintaining the margins. The maintenance of margin comes from two factors. One is how do you manage your liability side. We have a very strong liability franchise, and if you have seen CASA growth of 8% at this level is very good. And as I mentioned, our daily average balances are going up, which will bring down the cost of resources. Even our cost of borrowings have come down. So the primary focus is in terms of the liability management. While on the asset side, we will definitely look at that what could be the products which will give us good return, particularly in case of Express Credit is a good ROA product and good NIMs are available there. So we'll be focusing on this product line also.
Last one is now the firmer roadmap for listing of the subsidiaries, mutual fund, and if possible general insurance. If you could give a color on that.
No, I said that there are two entities in our subsidiaries which are eminently suitable for listing. I'm not given the timeline, I'm not given the sequence.
So when is the time that you will firm it up?
Yeah, we'll firm it up. You will be the first one to know. Thank you. Sorry? Q4, did I say that?
Hear from the market. Is there a timeline that you're
Unless you hear from me, Gopika, don't believe anything. Thank you.
Thank you. Next question is of Falak Nas from Asian Age.
Sir, I wanted to know how much of the education loans portfolio is linked to the US market, and of the education loans, how much of it is under contractual moratorium, where EMIs have not yet commenced, and is it showing any stress, given the uncertainty in the US, employability of the students there?
There's no stress. See, our overall educational portfolio to the US is minuscule. It is not very significant to worry about. So the other two parts also, I'm not having any data because we have not really looked at. There's no great concern there.
Could you elaborate on your branch expansion plans?
Overseas or domestic? Domestic, yes, we do have. I think this year we have announced that we would have 450 to 500 new branch offices.
Thank you. Next question is of Rosebud from Economic Times.
Good afternoon, sirs. So before I ask my two questions, just a clarification. So in SBI's house view for the December monetary policy, are you expecting her to cut or is it a status quo?
December is status quo. March is 50% chance.
Thank you. Okay. So your personal gold loan portfolio grew 86%. And are you seeing a shift from unsecured personal loan towards the gold loan? Or how is it? Can you throw some light on that, sir?
Yes. We don't have any empirical data, but I think there is a movement from unsecured to personal gold loan for two reasons. One is the gold prices justify, pledging the gold, number one. Number two, the rate of interest on the gold loan is much lower than an unsecured personal loan. Definitely there is a shift towards gold loan from the unsecured personal loan.
Okay. So we are seeing unseasonal rains. We could see them as we walked in here. What kind of effect are we expected? Is this unseasonal rain expected to have on food inflation? And when will it actually show in numbers?
It's very important that the Rabi sowing is not delayed. I think any dry spell at this juncture is good. Our internal assessment is that if we have dry spell even now, we will not have any impact on the Rabi season. But if the rains continue for 15 to 20 days more, the Rabi sowing may be impacted. So I'm not hazarding a guess on the food inflation, but definitely the sowing is important from a Rabi perspective.
Thank you. Next question is of Mr. Mayur Shetty from the Times of India.
Thank you. So you had earlier said that you all are working on simplifying the eKYC process. So has there been any development on that? And also, if you can provide some perspective on the bank's size, how does it rank among global banks now that it's a 100 lakh crore bank?
100 lakh crore is not translating into any major movement. In terms of assets, I think we are at 43 now. 43. Market capitalization probably, if all you guys pray for us, and we probably will move a couple of notches. In terms of the project Saral, which I spoke last time, simplification of processes, we have identified 8 impactful themes. The first theme we have taken up is the whole revamping of the KYC process. And as I mentioned in another forum, it's not only about SBI's KYC process, which is itself is cumbersome. We realize that there are 15 different ways KYC is done in SBI alone. So we want to actually revamp our own processes. And in the process, if we have to have some discussion with the regulators, with the government in terms of improving the ecosystem of the KYC, re-KYC, e-KYC, v-KYC. The whole gamut of KYC is going to be revisited by us. And some of these discussions we will be doing with the regulators as well as with the government. But more importantly, we will be looking internal. How do we simplify the whole process of how our customers are dealing on the KYC front?
Thank you, sir.
Thank you. We'll take the last question from Mr. Saikar Das of Bloomberg.
Sir, good evening. This is related to acquisition financing only. How do you plan to approach this area? You mentioned about SBI cap that you will seek to take help in this way. How do you plan to approach this area traditionally dominated by global banks? They have their own expertise, wider network. What is the primary idea?
No, one is, see, we know the corporates very well, much of these corporates, and the acquisition financing, outbound acquisition financing, we always have been doing. I don't think it is new to us. The number two, yes, I think some of the MNC banks are very well into this activity. We don't mind collaborating with them, even if the transaction is to be done together. The collaborative efforts will be there. So it's a combination of our own expertise, which we've been doing over the years in terms of the outbound acquisition financing, and collaboration with our own merchant banking unit as well as with the foreign banks, which have been doing for many years here in the country.
Thank you.
More questions?
On the Russian oil payments, because of the sanctions that have been imposed on some of the oil companies which have exposure to Russia, how is SBI sort of placed? I understand you don't do transactions with sanctioned entities, but you may also have other businesses. So what is the status of this?
So we have very strong compliance framework which handles even these sanction-related activities. And within that framework, whatever is permitted, we do. Which is not permitted, we don't do.
How are the transactions happening now?
I think we'll restrict to the results, right?
Chali. Thank you, ladies and gentlemen, for joining us here today. And thank you to the bank's management for being with us here today. Before we conclude, I pray to the Almighty to bless us all with health, wealth and happiness. Mast rahe, vyast rahe, swasth rahe. Thank you. Have a great day.
Thank you.
हेलो
बोला मैंने उसको ऑडियो चेक साई
हेलो हेलो साई
काम पे ना औरतों से बात करता रहता है
हेलो ऑडिओ
हॅलो
चेक करा
ऑडिओ चेक
सगळ्यांनी,
1 2
audio
3
check. हॅलो हॅलो
नको बोलू रे
ते लोक मला याच्यावर बोल ऑडिओ घेतलाय त्यांनी
ऑडिओ चेक 1 2 3 4 साई
हॅलो हॅलो
ऑडिओ चेक 1 2 3 4 5 6 ऑडिओ चेक 1 2 हॅलो चेक चेक माइक चेक ऑडिओ चेक 1 2 3 4 5 ऑडिओ चेक हॅलो चेक माइक चेक हॅलो चेक 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 ऑडिओ चेक 1 2 3 हॅलो चेक 1 1 हॅलो चेक 1 2 3 ऑडिओ चेक हॅलो चेक ऑडिओ चेक 1 2 3 4 5 6
आता हा स्प्रिंग आहे हा वर खाली
ओके.
पडणार तुमचा. बसतो तो नेहमी
बसवायला लागेल यार राहू दे तसंच लावतात ते
तिथेच लावली
आता काय नको गप ना शांत बस ऑन आहे ब्ल्यू लाईट आहे ऑडिओ चेक 1 2 3
हॅलो 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 1 2 3 4 हॅलो हॅलो हा
ऑडिओ चेक 1 2 3
नाही ऑन नाही
चेक 1 चेक 2 चेक
हॅलो 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 हॅलो
ऑन करा सर करून ठेवू ऑनच आहे ना मगाशी पण ऑनच होता तू बोलता
लावून टाका सर एनडीटीव्ही याच्यात टाकून द्या ते परत पडलं बिडलं राहिलं पडायचं
ठीक आहे का
अनिल ओके Hello, 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 hello.